Hi everyone, good morning and welcome to today's morning report on Tuesday the 15th of September with me, Rich Perry, market analyst at Handset Markets. These markets are fairly settled actually. It's Fed week, so markets are getting a little bit into sort of cautious mode ahead of this huge announcement on Thursday, which could have significant connotations for the markets generally. So what we've seen yesterday is pretty much a very settled day. We saw Wall Street basically very much in quiet mode, low ranges, low volatility, low volumes, just slightly down on the S&P 500, but basically nothing really doing there. And similar sort of drift into the Asian session. Just a little bit of direction off the Chinese Shanghai index, which was down 3.5%. But still, European markets are basically flat. There's no real direction either yet on forex markets. Let me just show you how the dollar's going today. We've got the dollar is basically sideways today, nothing doing really there. Slight element of strength against the euro, but basically flat there. Little bit balanced out by the strength of the yen actually. The BOJ coming out in its monetary policy overnight, standing pat on the 80 trillion yen per annum. There, and also the 8-1 split in terms of the voting makeup on the BOJ, but still nothing really significant there. But I'll talk about the dollar yen moves in a little while. However, in terms of sentiment on the commodity prices, well, oil is basically flat again. But look at this triangle that we've got developing here, and it'll be very interesting to see how this one breaks. The price of Brent crude has already broken its equivalent triangle, broken to the downside. So that doesn't really bode all that well for the WTI, but still it's holding on just at the moment. So, what have we got to look forward to today? Well, there is a bit of data that we've got actually today, and markets will be looking forward certainly towards the UK CPI. That's at 9:30, not too far out actually. Forecast to come in flat actually on the CPI on the headline data, down from plus 0.1 last month, but the core data is expected to dip back to 1%, 1.0% on the core CPI. So that could give sterling a little bit of pressure to the downside if there was an undershoot of that anyway. But that's not all that great in terms of looking out towards a Bank of England rate hike. Then at 10 o'clock we've got the ZEW. Now this is interesting because this has been falling now again for the past 5 months. It's expected to fall again to 18.4 this month. So that is again a 6-month consecutive decline on that ZEW, and there is a direct correlation between ZEW and German growth. So that's not all that great in my opinion. And then at 1:30 we've got US retail sales expected to come in on the ex-autos basis, expected to dip slightly on a month-on-month basis to plus 0.2%, and into later on in the afternoon we've got the industrial production as well for the States at 2:15, expected also to dip to negative 0.2%. So quite a lot out today, which could have an impact and provide a bit of direction, because these markets are pretty much in need of direction at the moment, and we'll see how this one pans out. But my chart of the day is the Aussie Kiwi actually. Now we've had a change of Prime Minister actually in Australia yesterday, and that is still sort of impacting to a certain extent, you could argue, on the chart of the Aussie Kiwi, but the main impact was the rate cut that we saw last week from the RBNZ, and that has once again brought us back towards the top of this trading band. Now I would certainly say that is a trading range. You've got the support that comes in sort of 108.90 to 109.30. Several lows in that support, and every time it gets towards 113 you start to get the sell signals coming through, or certainly the taking profits signals. 113 seems to be the start of a big barrier, about 130 ticks, on this every time it gets towards that level. Look also at the RSI. Every time it gets towards 60 seems to be in the last couple of months. 60 seems to be the limit, and it's now at 59. MACD lines, nothing really doing there, is it? Slight strength, you would argue, on the stochastics. So I would say that any sort of sell signal you get around just possibly even above 113, I would start to look at that as an opportunity to sell. Last couple of days we've actually had some intraday moves above 113, 113.11 and 113.05 today. And I would say again, any sort of sell signal that you start to get in this sort of range, I would be looking at to continue to play this range. I don't see this one as a breakout. I don't see this one as pushing continually forward and breaking up to the upside with new highs. That would be a significant new high, dating back to November last year, I think it was. Yes, November last year was the last time we would have broken out. So that I don't really see a breakout happening on this Kiwi, on this Aussie Kiwi cross, and I think this is going to be a continued range. So I would be playing that range. So I wish you good luck in your trading today, and I will speak to you later. Thank you.